Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by George McDonaugh, who's co-founder at KR1. How are you today, George?
I'm very good. Thank you for having me on.
We haven't spoken for many years, and there might be a deliberate reason for that, but it's actually good to see the progress you've made since I first met you, probably 6 or 7 years ago. In simple terms, could you explain to me why I would be interested in investing in KR1 over, for instance, just buying Bitcoin, which has done rather well in its own right?
Blockchain's created digital scarcity. That was the main innovation. And obviously Bitcoin is the main bellwether of that. But that innovation keeps expanding. There keeps being new projects and new infrastructure that's being built. And what we do is we get in early into those new sort of bits of infrastructure that then later become the pillars of this new financial system which is being built. And so getting in early, obviously, as a venture capitalist company, as a company that allocates capital early, we see the benefits when those projects come to the fore.
You recently reported your 2023 results to the end of December last year. NAV increased 178% to 195 million from just 70 million last year, and the trend appears to have continued with the NAV reaching 234 million by the end of March 2024. Obviously, the market went bananas during that period. What has driven this performance from your perspective, and do you see it continuing for the foreseeable future?
Well, I think the main thing has been, picking great investments, right? And I think that along with the staking revenue that we get from some of these investments, that keeps us buoyant through the bear market. And it allows us to continue to allocate capital to young projects, when the market is cooler, shall we say. And then when the market returns and the sentiment returns, there's a sort of compounding effect that comes from that, and we can see pretty steep growth pretty quickly. I think currently there's a lot of interest in digital assets. There's a lot of reasons for that, obviously, with the American ETFs, etc. And so I think, we're perfectly set up at the moment to sort of capture that sentiment, I think, and hopefully outperform Bitcoin.
Do you think the UK will follow the US and enable crypto ETFs and such like to list on the UK market?
Well, I saw this morning they've announced that over 1,000 financial firms in the US have just filed with the SEC to show that they have exposure to this new Bitcoin ETF. I think that's a very substantial number of firms. So from a UK perspective, I think it's just a matter of time. More people come to understand this asset class, and I think they want to access it through the traditional rails, the traditional financial rails, which I think makes sense to begin with. And so it's a sort of slow and steady approach. It's probably a little slower than I'd like, but it's happening. And so I think, and also I think, there's clearly a lot of opportunity in this new sector, and I think the UK top brass have understood that, and we're beginning to see movement. We had this not ETF but ETN given the green light, and my understanding is that that's just the beginning. So fingers crossed the UK gets a move on.
2030, 2040, 2050. What are you looking at?
I think a lot sooner than that, but I think there's obviously political stuff happening at the moment. There's general election potentially not too far off, and so there's lots of chat about all the different areas of innovation, because innovation always comes to the fore, doesn't it, when there's an election? I think it'll be sooner than that.
Getting back to KR1, you mentioned in your results that you also made 8.7 million revenue from staking in 2023. In simple terms, how much does staking work, and should we expect? So how does staking work, and how should we expect much higher staking revenues in 2024 given the market rebound?
Well, staking's a bit of an onion to unwrap, but on the sort of most basic terms, people have a sense of what Bitcoin is and Bitcoin mining. People plug in their machines into the network and they get a Bitcoin reward. So those machines basically verify the transactions. That's one side of how it's done. It effectively makes people put what's called skin in the game, right? So you've got an electricity bill that you need to pay. So that keeps you honest as a market participant. And then proof of stake is another way of doing it, where you lock up your tokens as collateral. And if your validator that you've bonded it to misbehaves, you can lose that collateral. So that's skin in the game as well. It's just a slightly different way of doing it. And the overall aim, of course, is to secure these networks by bonding your collateral in the network. And you get a reward for that. And that reward comes in the native token of that blockchain. And over time, that can become substantial income, as it does to us. In 2017, we made the decision to put proof of stake blockchains as a sort of core aim to build a portfolio around, and that's obviously come as a very good decision, because obviously, as you stated, there's quite a lot of income coming in. As the market moves up and things become more buoyant and the prices move, then the income to the company also increases in line with that. So it moves with the market cycles. It's incredibly useful for us because, of course, we can use this income to invest in more companies.
Finally, can you talk us through some of your key portfolio companies and your expectations for all of them, and why you chose to invest in them in the first place?
Great. Well, I think probably the best example of what we do is a project called Celestia. And we decided to invest in that project because it had a vision of building what we call modular blockchains. So it's a way by which their design gives more choice and functionality to the developers that are building those decentralized apps and applications. So we invested 3 years ago at a 10 million valuation. Today we're around 900 times our money, so it's a position of about 85 million in the portfolio, which offers $75,000 investments, pretty okay, even for crypto. And so we're invested until October, so it's not immediately available to us, but it's incredibly exciting to have that moment where an idea turns into a project. That project is understood by the market, and then it's valued at a very significant value because of what it can offer, which is essentially the whole life cycle of the kind of investment that we do. So it's a fantastic example of that. Secondly, I'd probably say that Polkadot's a similar thing. It's a project that we did, long before Celestia, but that's also got a fantastic technical roadmap. And that's our second largest position of around $35 million in the portfolio. And then lastly, I'd point to another project called Lido, which is the biggest Ethereum staking provider. I think we invested around 150K in that seed round, and that's sitting on the balance sheet at the moment at $28 million. So that was a good investment. And we expect, as Ethereum comes to the fore, that Lido will obviously follow in its footsteps because of how intimately connected it is with that project. I think we're coming up quite soon to this American SEC decision on Ethereum ETFs. It's not clear which way it's going to go, but certainly my fingers are crossed for it to be given the go ahead. But let's see.
Well, on that question, thank you very much to George McDonaugh, the co-founder at KR1. Hopefully we'll speak again soon.
Thanks for having me on.